right, good afternoon, everybody. Today is Friday, the 4th of March, 2011. Let's go ahead and take a look at this market. The S&P 500, real volatile this week, obviously. We had, big volatility. Let's just take a look at this 10-minute time frame. I was just looking at the screen there, and it was distracting to me. So we've got this S&P 500 that's really been all over the place. Since that gap down due to the Libya news 2 weeks ago, we've been making these higher lows in the S&P 500 on a bigger basis and chopping back and forth above and below that 5-day moving average. At the same time, we've encountered resistance right at that level that the market gapped down to initially, and that was where we saw the 5-day moving average. So we can see here this red 5-day moving average. We've been seeing it kind of flatten out back and forth, but the bigger level of resistance right now is about 133.70. That's where the gap down found resistance. We found resistance there on a gap higher earlier in the week, and then again yesterday. So now we have these higher lows, and we have these levels of prior resistance holding as support. Last night I was saying to subscribers that this level here, the 132.40, was going to be important once again, because that's where we had seen resistance, which had turned to support, and we gapped above it yesterday. And obviously, once we broke below that, and that's where the 5-day moving average was, we did get a nice quick drop down to what should have been, and what did turn out to be the next potential level of support. So we've got the market kind of bouncing around back and forth in here, and when we back it up to the daily time frame, we're still in an uptrend. I mean, you look at this thing, and worst case you could say is that we're starting to turn neutral. There's a quote by George Soros that volatility peaks at turning points and diminishes with the trend. Well, think back to just the last 2.5 months. We had very low volatility in this market as it was grinding higher. So the volatility was diminished with that trend, and it increases at turning points. Now, I don't want to call it top here because there's nothing really to suggest a top. We have a rising 50-day moving average, and maybe a little bit more neutrality that we have the 10-day moving average crossing down through the 20-day moving average. But maybe it's going to be like last time from mid-November, where the market quickly found support in that area, and then we had this next leg higher. So let's just continue to focus on the more intermediate term levels. This trend line obviously was tested. That came off the September lows. It was tested at the November-December lows, and then again this week. So going forward next week, we're going to want to continue to be aware of this bigger level right now, which is at about 130, and 130 is also where we have that 50-day moving average. Earlier this week, I had actually said I was expecting a test of that 50-day moving average, and what I was hoping for was that we would get that test because it was, it was a prior level of resistance as well. But I was hoping we would get a test and then kind of push down below it. So now we have the 50-day moving average has risen. When I was talking about it, was down here. So you can see that. Let's just take a look together here and see the rate of ascent of that 50-day moving average. So we had it at 129.29 3-4 days ago, and now it's at 129.75. So it's risen. It's rising at about 10 cents a day, that 50-day moving average. So when the market starts to turn neutral here, we'll see that 50-day moving average begins to slow down and flatten out. But it's still going to take a while because we're getting rid of data that was 50 days ago, which might have been back in December. I'm just guessing here. Maybe how many days into this year are we? Probably about 50 trading days into the year, or pretty close to it, I would imagine. Anyways, if we can get above this level next week, this 133.80, then maybe we continue to squeeze shorts and continue this uptrend that's still evident, obviously, on the the weekly time frame. We're finding support where we were supposed to on the weekly time frame. That is that the most recent level of resistance that was tested back from late December, not December, but the third quarter of 2008 was in this area at 131. So the market is really acting well technically on the bigger term picture. It's when we get to the short term time frame that we see all this volatility and this indecisiveness, and that's when we have to kind of back off a little bit and lower our expectations compared to obviously when we have just this real nice uptrend and everything seems to be going higher. But you have to be impressed, I think, that the market does continue to hold up. This 130 level is the level to watch basically here over the next coming weeks. I don't even think breaking that would be a huge deal. And I say that because if you take a look at the action in the financials, we've seen the financials. We spoke about this on Wednesday, that a lot of people look at a move below the 50-day moving average, a close below the 50-day moving average as this big bearish event, but we're still holding a bigger level of support at 1620. That's the more important level in the financials. Now the financials are still, they're a weaker group here, obviously. When you look at where we are and where we've come from, that this market is really more towards the lower end of the range that we've seen, while the NASDAQ, of course, the NASDAQ was only down 0.5% today, and it's right up near the high end of that range, and we had recaptured this level that we spoke about on Wednesday, which was that $57.30 area, the prior resistance. So we closed back above there on the weekly. We tested the rising 50-day moving average. We have a 10 and 20-day moving average crossing. Not necessarily a big deal, but just a reason to think maybe it needs a little bit more of a time correction. When we look at that weekly chart, again, we're at 10-year highs in there. That's why we were starting to focus on the Comp X. That is the NASDAQ composite versus the NASDAQ 100. And we had gotten, I think maybe 20 points away from that high back here in 2007. So that high was 2861. And here last week we had seen 2840. So we're 21 points away from that, what was essentially a 10-year high in the NASDAQ composite. While, of course, the Russell 2000 it continues to be just a couple percentage points away from all-time highs in there. So when we look at that, even on an intraday basis today, the Russell 2000 came down. We've got these higher lows in here, and we've got a rising 5-day moving average that's holding above. So technically, the Russell is acting much stronger than definitely the S&P 500. I think 8150 is a key level to keep an eye on early next week. That's just a little bit. It gives us a little bit of cushion below that 5-day moving average. But what we're seeing here develop over the last 2 weeks within these ranges is that we have higher lows, and you can look at this as people were looking at it, maybe that's a cup and handle. And now you could say, because we have another higher low, here's an ascending triangle on a 10-minute time frame. I think it's better to just kind of keep it framed within the overall bigger picture, which is we're just a couple percentage points away from all-time highs here. We've seen this really strong rally off of the September lows, and of course, again, if we the talk 2 weeks ago was this was the quickest that the S&P 500 has ever doubled in its history. So when that happens, maybe people just start to look at it and say, let's start taking a little bit of risk off. It's very impressive that the market can continue to climb this wall of worry and look at all these international problems in the price of oil, which the USO doesn't do the best job of representing. But the USO, you can see in the last 2 weeks, has gone from 36 to 42. So 6 points on 30, about 15% here on the USO. I'm not sure the exact percentage that oil has risen in that period of time, but we're up at I believe 103 or so dollars a barrel, and that's typically the market's been ignoring that somewhat. And on Wednesday, or it wasn't Wednesday. What day was it? It was Wednesday. Wednesday, I was looking for the market to kind of fall apart more. I was thinking that it was going to break down because of oil, and that's something that is actually kind of something that I talk about a lot, which is that you don't want to get in that habit of trading the S&P based on what oil does, or trading the gold versus what the dollar does, because they don't always have the relationship that the textbook tells us is there. And if you're trading on a short-term basis, those relationships can get destroyed and just do massive damage. That's what brought down long-term capital management. The people who were picking up nickels in front of a bulldozer. Well, the guy's shoelace got stuck underneath that bulldozer, and that was the end of a $10 billion fund or whatever it is. The point is, you have to manage risk on what it is that you are trading, and if you're trading the S&P 500, your decision should be based 98%, and I'm just throwing stupid numbers out there that I haven't quantified, but the largest majority of what your decision making for trading the S&P 500 should be based on is the price action of the S&P 500, not the volume, not the stochastic, not the moving averages. Those are all good reference points and good tools to help us kind of stay focused in our analysis, but it's not a reason to participate long, short, or to really to move to the sidelines. Those are things that we want to be aware of for money management decisions more than timing decisions. When is it appropriate to try to go in a little bit heavier and take a bigger position versus, hey, I got to, there's a lot of risk here, headline risk, other commodity related moves that are that increase the risk for your holdings, and decide, well, those are the times where it makes sense to just kind of pull back on the risk a little bit. And we continue to see some massive trends. This silver is just continues to be in a huge rally mode. It has been since September, and here's a double market that hasn't quite doubled. But I mean, if you talk about the S&P 500 doubling in the last 2 years, look at the price of silver. It's gone from 18 to 35. Not quite a double, but pretty darn close in just a period of 6-7 months. As we've been kind of looking at silver and the way that it traded here the last few weeks, we've been looking at the similar move in gold and saying silver looks like it's leading gold, and that's exactly what it has been doing. And this pattern continues to play out as well. It's pretty amazing that we had back on this move to new highs, kind of a little pause. Here we had a move to new highs this week, a little pause, and it looks like this type of move should be next for it. Now, you'd have to be an idiot to think that you can buy it here and just measure the height of that and put in your sell order there. You have to manage risk, of course, but gold obviously can, the path of least resistance is higher, and I think that in the GLD at least, 137-ish is the area that is 137-ish is where a stop probably ought to go, below that rising 10-day moving average. I was looking at it yesterday. It was amazing to me that gold actually, we know that gold's in this uptrend and that and all that, but look where we closed December 31st. We closed at 138.72. Yesterday we closed at 138.07. So as of yesterday, gold was down year to date, which intuitively doesn't make sense if you follow the markets. If someone had told you yesterday, hey, gold's down year to date, at least the GL is represented by the GLD, that doesn't it's not something that I think would have made sense. And let me put this headset on. I should have been looking at that message. It said the volume was sounding a little bit distant. That's because I had this camera going and I was trying to work the headset. So here I got my headset back on. That should do it, I think. Where am I? Okay. So let's take a look at some of these other things here. We've got so excuse me, the semiconductors, those were the guys on Wednesday that really took off, and that's what I should have really been looking at more than oil. Is that the semiconductors have been the leader for this market. They've been the leader, off the bottom. They were the first group to really get going. This group has clearly, well more than doubled from 15 up to, it had doubled, back here. Back in October of last year off of its lows from 2008. So clearly, the semiconductors have been the leader. They keep going up and keep going up and look like, hey, they're getting overdone to the upside. We're looking at, these trend lines, redrawing trend lines that represent the essence of trend. This would represent that essence right now. But, super impressive strength, the way that this group was able to get above those highs that are similar to the SPY right here at 133.80. So 133.80 in the SPYs is similar to what the semiconductors broke out at right here at 36.30 on Thursday. And what's encouraging here is that this resistance, and we had seen the same little pattern of a little ascending triangle. We had these higher lows, a rising 5-day moving average, but this resistance holding as support. So I think 36.10 will be an important level for the semiconductors next week. If we break below that, then maybe they're not going to be able to provide the leadership, and we have more of a time correction. But in the NASDAQ, very similar type of level right here at this level had been broken, these highs yesterday. But we've got a mixed message in this market, and the mixed message really tells us that what we have to do is we have to really just be, I say it all the time, we want to get involved in the primary trend at low risk points and then manage risk. And risk management is always job number one, but particularly when you get into a period of volatility like we're seeing now, that we want to take a look at that and say, okay, now's not the time to really press hard with our positions. Instead, we're going to have to grind it out a little bit, and you probably got stopped out of a lot of your swing positions maybe over the last 2 weeks and looking to reestablish. But we have to, lower our expectations a little bit and realize the environment that we're in isn't quite as bullish. But it's not bearish either. Not bullish doesn't mean bearish. It can mean we're getting more neutral. The retailers, I think we want to keep an eye on retail. I mention these only once in a while. I don't consider them to be a big leading group, but below 104, I'd set an alert down near 104, and next week if that group drops below 104, perhaps they're going to see a little bit further profit taking. You can see that they've had trouble with this 50-day moving average a little bit, and we're getting a little bit of a time correction more in here, and this could be the type of movement that we're going to see in the broader market as well, which isn't a horrible environment to trade in. There's still going to be great opportunities, of course, in the individual names. Some of the stocks that I had mentioned for subscribers that we were looking at, we do have a position in this VTG. VTG excuse me, once again tried to get going and got rejected up at this, it hit 225. These highs were 226. It traded big volume. It looked like it was going to get going, and had this just another one of these really quick moves. And whenever you get one of these quick moves, you have to look at the stock and say, I got to feed some of my stock out into that strength. But on a 1-minute chart, you can see it failed pretty hard here. It was pretty disappointing action. And when it breaks that VWAP, it means that the average person, long, is now losing money underneath this level. I still think that you look at the weekly chart of this, and it's still got a good looking weekly chart, but you can't get blinded by that and let your greed overcome sensible trading. So anyways, the stock pulled back in here. I think now again it's going to need to prove itself again next week and at least get above 215 or so. And I believe they report earnings next week too, so be aware of that. HLIT is a stock that continues to hold up nicely here. It really hasn't done anything, but it holds up nicely, and it's got a decent looking weekly chart as well. I think next week you could probably continue to look for a break past $9.80 in this name, above $9.80. The good news is we're getting higher lows, so if you're going to buy it above $9.80, I think your stop could go underneath this higher low here. So we could participate maybe in a bigger breakout with a 20 cent or so stop, which is the way I like to trade them, is low risk. ARBA, here we've got a stock in a big uptrend. I mentioned this one last night because it had pulled back, and we don't want to chase those gaps higher in the morning. But you can see that it's still recovering in here a little bit. I think Ariba, in particular, maybe above 32.25. 26 could get going next week. Brocade's another name with a pretty good looking daily and weekly chart here. Brocade, it's one of those stocks that never really seems to want to get up and go. But when you look at the weekly chart in where we are right now, we have a rising 10, 20, 30, 40 week moving average. We've had a little bit of choppy action in here on that big volume 3 weeks ago. But when we look at the daily chart, you can see it was a gap up. I believe it was earnings. The volume weighted average price since that event, so since that stock gapped higher and it traded that big volume, this is let's actually take a look at it on a 30-minute time frame. We'll just start drawing the line right here, and you can see that we broke above that briefly today, and now it says that the average participant, the average long, is now starting to make money after that gap. Obviously it's been in a bigger uptrend on the daily time frame, and there's a lot of people believing in this uptrend here, but now excuse me, the buyers seem to have regained control, and it got going in here a little bit today. If you're involved in this one, I would think absolute worst case stop down near about 620. If you're like me and you like to keep your stops tighter, maybe 630 would be a level, but it's something that looks like it's got room to maybe run up to $7 plus a share, and we can control it with low risk, and it trades 2.2 million shares a day. Capstone was on our watch list last night. This has been a good, strong stock this year. If you look at the weekly chart, it's approaching this high from November of '08, which was $1.67, and had a nice continuation higher today with volume. So we were talking about this one and set an alert at 153. That was the correct time to buy it. There was plenty of opportunity to buy it right there. If you were watching it, there was good size to buy, and this one closed nicely higher in here today. So again, similar to VTG had this big move, and we were buying it in the chat room at 207, and the correct thing to do is to sell some into strength and then decide whether you're going to hold it over here. I still own a little piece of Vantage, but nowhere near what I had owned at its peak. Capstone, had a nice continuation through the end of the day, but I don't hold my full position, and I don't think it's the correct thing to do. But this is the type of stock that, let me just get that weekly chart back. Sorry if I get you dizzy there. We could be, the next potential level for this one could be up near the, just under $2 a share. This is the type of stock that can get going nicely sometimes, and you look at it and say, well, that's just a penny stock. I traded 8 million shares a day. I can show you plenty of $50 stocks that traded less than $15 million worth of stock here today, or whatever the number works out to. We were earlier in the week looking at Biogen IDIC, and this is one it was a great looking chart. It had a nice consolidation in here. We bought it on Tuesday, I believe. I got out of it the same day like a dumbass. We bought it actually right in here, but this stock we were looking at this peak saying it should head up towards 73. So, I'd mismanaged this trade and didn't get involved. So last night I said, here's another biotech, or actually this was yesterday afternoon, another biotech that's looking like it can break out is Gilead, Gild. Gilead, we were targeting at least a move towards, to late last year's high. And on the weekly chart, you can see it's coming up to a level where it might continue to move higher. There's, could be bigger resistance up here at about 42, but still a nice looking chart. We had gotten involved yesterday afternoon right in here after that consolidation. So nice move in Gilead. Garmin was another one that had a nice tight consolidation yesterday, so we had that on our watch list for today. Nice movement in there past that. And the daily chart really is kind of choppy. I didn't trade this one today. Lazy Boy, I think we spoke about this one earlier in the week as well. But Lazy Boy had broken this resistance on big volume with earnings as well, and we were talking about not getting involved until we had that 5-day moving average flatten out, and it probably needed to get back above $5 a share or so. So in here, I think that next week this looks like the key level for Lazy Boy is about $10.05 a share. It's starting to stabilize a little bit, by showing a lower high here. I'm not the type of person who would, want to buy right in here. I want to see it come back up, and then pull back a little bit, test that 5-day moving average, and then break $10 a share and set a stop underneath a higher low. But it's a good looking daily chart, and it's a good example of why you don't buy a pullback to a 10-day moving average. You don't buy a pullback to a 20-day moving average. Those are inflection points. You say, well, that resistance, becoming support right at that 20-day moving average. Okay, and that's probably why it's finding support, but there's no momentum in it. You want to wait for that upward momentum or I want to wait for that upward momentum to develop before buying a stock like this one. I think you also want to keep an eye on NetEase and NTES. They reported earnings on the 24th. This stock is up near all-time highs, and it just recently made an all-time high based on that. So I think that NetEase, Chinese internet company, could continue to move higher next week. So those are some names to keep an eye on, and let's take a look. And you know what? That's going to do it. I'm done for the day, done for the week. Hope everyone had a good week. I will talk to you next Wednesday. Thanks for tuning in.